Hi, and welcome to the third and final video on the subdivision strategy utilizing the REI tools. So in this video, what we're actually going to do is use Property Analyzer, which is accessible directly from your homepage here. Alternatively, if you look up the top, you can simply click straight into Property Analyzer there and it will load up directly for you. So if you recall, we were actually looking at this property in Pinkenba as an example. Another way that you can actually do this is to hit Analyze in Full. And again, it will just take you straight through, but it'll actually pull through all of the address information for you. It'll give you some assumptions around rent, the purchase price, and estimated market value. And you can simply click Next, and it will show you a 10-year report of that particular property. So if we brought this property for what it was and then basically got the rent of 410, you can see here this would be positively clear. But what we're actually going to do is change all of our assumptions. And we're going to do that by clicking Edit. Now, we're going to verify our assumptions as well utilizing the Price Finder tool in conjunction. So the first things first, you can change the deposit, for example. So you can put it in at 10%, 20%, whatever the circumstances are for you. Now, we know that the market value isn't going to be 440. It's probably going to be a little bit less. The land value is obviously going to be that. But if we were subdividing this property, we're obviously going to end up with a much smaller property. So two things that we need to verify is obviously the value of the land in the area and obviously the value of the property after it's been subdivided. To do that, we're quickly just going to go back into Price Finder and utilize our My Research tools. So in this case, we know the property is located in Pinkenba. So what I can do is just type that directly in. We just want to do a quick sales search in the area. So we're going to change that from the drop-down box to sales search, and we're just going to hit search on that. Now, the first thing that we need to look at is okay, what's land selling for in the area? So we can select here from select property type vacant land, and this will look exclusively for land in the area. And you can also change the time frame, which is really helpful. So for example, we could do a 1.5 year time frame, or we could tighten that up and say, actually, look, I only want to look at the last year of sales for vacant land in the area. We can run that search, and this will bring back all the land sales that have occurred within that period of time, which can be really helpful, obviously, in determining what the value of the land will be. So you can see here that there's an 800 metre sale that went through for vacant land for 300,000. Now, we know from our previous video that we're going to end up with roughly 677 square metres. So let's, for this example, just assume that we got $250,000 for the sale of the land. Now we need to assess what the drop in the value of our actual property would be, given that we're going to be on a much smaller land size. So to do that, you can simply scroll back up, go to Refine Search. Instead of, we can still look at the same time period, but we don't want to look at land. Now we want to look at houses instead. And what we can say is that the property is a 3-bedroom house, but it's now going to be on approximately a 600 metre block, realistically. So we can just simply say, all right, we're happy to look at houses of 3 bedrooms specifically, up to, say, 700 square metres as a max, show me all the sales, and we can look at comparable properties that have sold in the area over that 1 year time frame. So there's only been one, and that's sold for 287. So now you can start to get a feel for, okay, well, if we, let's say we up the price to about 300,000 for our property. So going back to our Property Analyzer tools, let's say that we paid $440,000 for this opportunity. Now, we know we paid that. Now, we did our subdivision, and let's say the subdivision cost, I don't know, $75,000 for the sake of using round numbers. So right now that we've spent about $510,000 in total. Now, we know the reval on our property is going to probably be closer to $300,000. So we know that the market valuation is now $300,000. But we've got $250,000 come back into the deal, which means that, we've spent roughly $260,000 because we've on-sold the land. So you can do a variety of different scenarios with this tool, which will make life easier for you. So we can assume that we've already paid stamp duty and the solicitor costs in the acquisition, or you can factor those in as well. So you can, basically move these metrics around as you wish. But if you wanted to factor that in, we know that we actually paid $440,000. So you can use our handy little calculator and it will just add that cost in. We know that we're probably going to have about $1,000 worth of conveyancing costs. Let's say we took it on an interest-only basis. We know interest rates are about 4.1% at the moment, so you can just factor it in at whatever the current interest rates are. So we don't know what the rent is, so we would need to go back and we can use, again, Price Finder to verify that. To do that, you can simply click on Rentals for Suburb, and it will give you the same display that we had before. So we can look for current listings for 3-bedroom properties within the Pinkenba area, run a search, and this will bring back all of the rentals that are currently listed. So we can see there's some commercial and industrial land in there. So we need to filter some of that out. So what we can do is go, okay, we just specifically want to look at houses, rerun that search. And there's one property available on a 1,000 square meter block for 400, which seems to be of a bit better quality as well. So what you could do is, okay, we'll put in a conservative figure of around $360 just for the sake of this demonstration. So we'll drop the rent to $360. We can factor in rates. Repairs and maintenance is a bit of an older property, so we might want to add additional budget. We won't have any service contracts associated with this. We know management rates are around about that. Let's say insurance was about $1,000 for the sake of argument. And we could just put in whatever associated cost to get back a total annualized expense. Now, we could put in a capital growth at 5%, so basically saying that it'll double every 20 years. We're not going to use depreciation. We know it's a fairly old property, but if you wanted to include it, you could simply just check that box and then specify the age of completion. So we can go back to our results, and what we'll get now is a 10-year report on the property with all the adjusted figures in there. And we can see here that this is going to be negatively geared, in both pre-tax and post-tax terms. So we can see obviously the property market value, the amount of the loan that we've took, which looks to be like it needs some adjusting. So sorry guys, that was my mistake. This figure should actually be 250,000. So you can rerun it through again. And this should get the correct figures now. There we go. So basically, obviously minus our deposit, what we're saying is that we're started with a 72% LVR. We've got, approximately $100,000 worth of equity after the first year of ownership, which will produce a buying power of 170. So not quite enough to go out and do another deal. However, looking at the year 5 column, we can see here that we've now got $441,000 worth of buying power generated from the equity available in this property. It is actually positively geared now that we've got the correct figures in there. And that's it. Nice and simple. But the thing is, you can go away and just keep manipulating all this data until your heart's content. So you can sit there and go, okay, well, what if we assume that we have no deposit? What if we assume that we didn't sell the land for $250, we sold it for, let's say, $150, so you can add another $100,000 worth there, and you can just simply keep changing it until you get back the results that are specific to you. So you can see in this scenario now, things have changed. It's definitely negatively geared, and that's it, really. That's what Property Analyzer will allow you to do, is look at all the different scenarios. So thanks, guys, for watching. If you need any help, feel free to contact us at the office, and we'll be more than happy to book you in for a one-on-one session to go through anything that we've discussed in today's session. Cheers.